I want you to picture the moment you book your dream vacation. You are sitting at your computer, you finally found the perfect flight to Rome, or that bucket list cruise to Alaska. You are excited. You've entered your name, your passport number, and your credit card details. You are about to hit purchase, but then a little pop-up window appears, or maybe it's a brightly colored box right above the total. It says, protect your trip for just $49. Recommended. And in that split second, fear kicks in. You think about your age. You think, I'm 72. What if I get the flu? What if my husband's back goes out? I better be safe. So you click yes. You pay the $49. You feel a wave of relief. You think you're covered. I need you to listen to me very carefully. You have not bought protection. You have bought a revenue stream. That little checkbox is the single most profitable click on the entire airline website. And for you, my passengers over 60 with medical histories, it is often completely worthless. By clicking that box, you have likely purchased a policy that excludes your high blood pressure, excludes your heart condition, and puts a cap on your medical bills that is so low it wouldn't pay for 2 days in a European hospital. I want to tell you about a passenger of mine named Arthur. He clicked the box. He felt safe. He had a stroke while visiting family in Spain. Because of a technicality in the airline's fine print regarding his medical history, the insurance paid zero. Arthur and his wife were left with a $150,000 medical bill and a $40,000 bill for a medical jet to get him home. It wiped out half of their retirement savings in 1 week. Do not let that be you. Today, I'm going to show you why you must stop clicking that box and how to buy the real insurance that actually protects your life savings. For those of you joining me for the first time, hello. My name is Sophia. I have been a flight attendant for 15 years. I have flown millions of miles. Now, I am not an insurance broker. I don't sell policies. I don't get a commission. I am your guardian of travel. My expertise comes from the other side of the curtain. I am the one who stands in the galley with the paramedics when they board the plane. I'm the one who holds the hand of the spouse who is crying because they don't know how they are going to pay for the ambulance waiting on the tarmac. I see the medical emergencies happen in real time. And sadly, I hear the horror stories months later from passengers who tell me, Sophia, I thought I was covered, but they denied my claim. The travel industry relies on your fear. They rely on you being too busy to read the 40-page PDF document attached to that $49 checkbox. But I have read it, and today I am going to translate that fine print into plain English. My goal is simple. I want you to travel with confidence, knowing that if the worst happens, your nest egg is safe. Let's start with the money. When you buy insurance from the airline, or the cruise line for that matter, you need to ask yourself, what are they actually protecting? This is secret number 1, the trip cancellation distraction. The policy the airline sells you is primarily designed to cover trip cancellation. It protects the cost of the flight. If your ticket cost $800, the insurance is designed to give you that $800 back if you get sick before you go. That is nice. But losing $800 won't bankrupt you. What will bankrupt you is a medical emergency abroad. And this is where the airline policy fails you miserably. Most airline add-on policies cap their emergency medical expense coverage at a shockingly low number, usually around $10,000 to $20,000. To a healthy 25-year-old, $10,000 sounds like a lot. To a senior in a foreign country, $10,000 is a joke. Let's break down the costs I see in 2024. A broken hip in London requiring surgery and a 5-day hospital stay, $40,000 plus. A heart attack in Mexico requiring a stent and ICU care, $60,000 plus. A stroke on a cruise ship requiring a helicopter evacuation, $100,000 plus. If you have a $50,000 hospital bill and your airline insurance only covers $10,000, you owe the hospital $40,000 cash before they will let you leave. I remember a passenger named Mr. Evans, a lovely man, retired teacher, 74 years old. He bought the insurance through the airline for his trip to Paris. He tripped on a cobblestone street and shattered his leg. It was a complex fracture. He needed surgery and 10 days in the hospital because of complications. The total bill came to roughly $45,000. He submitted the claim to the airline's insurance provider. They sent him a check for $10,000. They said, "That is the policy limit." Mr. Evans had to put the remaining $35,000 on high-interest credit cards just to get out of the country. He is still paying it off today. Before you ever buy insurance, you must open the schedule of benefits. Do not look at trip cancellation. Look specifically for a line that says emergency medical expense. If that number is less than $50,000 or $100,000 for cruises, it is garbage. Do not buy it. Most airline add-ons fail this test immediately. Now let's talk about your health. I know my audience. Most of you are healthy, active seniors, but you have histories. Maybe you take a statin for cholesterol. Maybe you take a pill for high blood pressure. Maybe you had a knee replacement 3 years ago. You consider yourself stable. The insurance company considers you a pre-existing risk. This is secret number 2, the look-back trap. Almost every single checkbox insurance policy sold by an airline has a strict exclusion for pre-existing conditions. But here's the trick. They define pre-existing differently than you do. They use a look-back period, usually 60 to 180 days before you bought the policy. They will look at your medical records for that period. If they find anything related to the condition that caused your claim, they deny it. You might think treatment means surgery or being hospitalized. No, to an insurance adjuster, treatment includes a change in medication dosage, even lowering it, a routine checkup where a symptom was mentioned, a doctor recommending a future test. I want to tell you about Mrs. Gable. She was flying to her granddaughter's wedding. She bought the airline insurance. She had a heart condition, but she had been stable for 5 years. However, 1 month before she booked the flight, she went to her cardiologist for her annual checkup. He adjusted her medication slightly. He upped the dosage by 5 milligrams just to be safe. Mrs. Gable had a heart scare during the trip and had to cancel the return flight and stay in a hospital. She filed a claim. Denied. Why? The insurance company requested her medical records. They saw the dosage change 30 days prior. They argued, your condition was unstable during the 60-day look-back period because your medication was changed. Therefore, this is a pre-existing condition, excluded. She received nothing. If you rely on the airline's generic policy, you are essentially gambling that your body will not have any issues related to your past. At 70 years old, that is a gamble you cannot afford to take. So, Sophia, are you saying I can't get insurance because I have high blood pressure? Absolutely not. You can get full coverage for your pre-existing conditions. You can get coverage for your heart, your diabetes, your bad back. But you cannot get it from the airline checkbox. You have to get it by using secret number 3, the golden window. There is a special clause in third-party insurance called the pre-existing condition waiver. This waiver legally binds the insurance company to cover your chronic conditions, as long as you are fit to travel on the day you buy the policy. But there is a catch, a big one. You must buy the policy within a specific time window, usually 14 to 21 days of your first trip deposit. This is why the airline checkbox fails you. Often, you book your flight months after you booked your tour or your cruise. By then, the golden window has closed. Or the airline policy simply doesn't offer the waiver at all, regardless of when you buy it. I want to share a success story to prove this works. I had a passenger named Brenda. She was on dialysis. She had a very complex medical history. She booked a trip to Italy. Instead of clicking the airline box, she went to a third-party site on the same day she booked her flight. She bought a policy that specifically included the pre-existing condition waiver. During her trip, she developed a kidney infection related to her dialysis. She was hospitalized for 3 days. The bill was $12,000. Because she had the waiver, the insurance company paid 100% of the bill. If she had bought the airline insurance, they would have seen kidney failure in her chart and denied her instantly. You need to know your day zero. Day zero is the day you put the first dollar down on your trip. Did you pay a $50 deposit for a cruise in January? That is day zero. Did you buy your flight in March? That is day zero. You have 14 to 21 days from that specific date to buy your insurance if you want your pre-existing conditions covered. If you wait until the week before you fly, it is too late. The waiver is gone. We have talked about paying the hospital bill. Now we have to talk about something much scarier: getting you out of there. This is secret number 4, the nearest adequate facility trap. When you buy that cheap airline insurance, you see a line that says medical evacuation, $50,000. You think, great, if I have a heart attack in Jamaica, they will fly me home to my cardiologist in Chicago. Wrong. You are confusing medical evacuation with medical repatriation. Standard airline policies only pay for evacuation to the nearest adequate facility. Here is what that means in plain English. If you have a stroke in a remote part of Mexico, the insurance company decides where you go. They will not fly you to Miami. They will fly you to the closest hospital that has a neurologist. That might be a public hospital in a rural city where the staff speaks no English, the standards of care are different, and your family has nowhere to stay. Once you're there, their job is done. You're stuck there until you're healthy enough to buy a commercial ticket home. I worked a flight bringing a gentleman named Robert back from the Dominican Republic. He looked 20 years older than his passport photo. He told me he had a heart attack at his resort. His airline insurance refused to fly him to Florida. They said the local hospital in Santo Domingo was adequate. He spent 3 weeks in a shared room with no air conditioning, battling an infection he picked up at the hospital. His wife eventually had to remortgage their house to pay $35,000 for a private air ambulance to finally get him home, because the insurance said, "He is stable where he is. We don't pay for convenience." When you buy third-party insurance, you must look for a specific phrase, hospital of choice, or look for a separate membership like MedJet. This is not insurance, it is a membership. If you are hospitalized more than 150 miles from home, they ask one question: where do you want to go? Then they send a jet to get you. No questions asked, no medical necessity arguments. If you travel internationally, this membership is worth more than gold status. Now, I need to speak to my American seniors specifically. I hear this on almost every flight to Europe. Oh, I don't need extra insurance. I have Medicare and a great supplement Plan F. This is secret number 5, the Medicare border wall, the hard truth. Medicare provides zero coverage outside the 50 United States. The moment your cruise ship leaves U.S. territorial waters, or the moment your plane touches down in London, your Medicare card is just a piece of plastic. But Sophia, I have a supplement, Plan F, Plan G. Yes, some Medigap plans offer a foreign travel emergency benefit. But have you read the fine print? It usually has a lifetime limit of $50,000. One major heart attack wipes that out. It rarely covers medical evacuation. It works on a reimbursement basis. This is the part that terrifies me. In the US, hospitals bill you later. In many parts of Europe, Asia, and Mexico, hospitals operate on a pay-to-leave basis for tourists. If you rely on Medicare supplement reimbursement, you still have to pay the $20,000 bill up front on your credit card before they will discharge you. If you cannot pay, they will confiscate your passport. I am not exaggerating. I have seen it happen. I had a couple, the Hendersons, on a flight back from Rome. They looked shell-shocked. Mrs. Henderson had a severe gallstone attack in Italy. Emergency surgery. The hospital bill was 18,000 euros. They handed over their Medicare card. The Italian administration laughed. They handed over their supplement card. The administration said, "We don't bill American insurance. You pay cash, you get receipt, you claim later." They had to call their son in Ohio to wire transfer their savings account money to the hospital bank account just to get her discharged. Do not assume your US coverage travels with you. It doesn't. Now, let's talk about that fancy metal credit card in your wallet. The Chase Sapphire Reserve, the Amex Platinum, the Capital One Venture X. They market themselves as the ultimate travel card. They say trip insurance included. This is secret number 6, the secondary payout trap. While these cards are excellent for lost luggage or a delayed flight, their emergency medical coverage is often weak or non-existent. Many premium cards cap medical coverage at $2,500. That pays for an ambulance ride and an aspirin. That's it. Even if they have higher limits, credit card insurance is almost always secondary. This means you must file a claim with your primary insurance or Medicare first. Wait 3 months for Medicare to deny it. Get the official denial letter. Then submit that letter to the credit card company. Then wait another 3 months for them to process it. You are floating that $20,000 hospital bill for 6 months. Can your finances handle that? Open your credit card benefits guide PDF. Search for emergency medical and dental. If it says secondary, or if the limit is under $50,000, do not rely on it. Use the card to buy the points, but buy a separate third-party primary policy for your health. Finally, secret number 7. This is the ultimate get-out-of-jail-free card. The airline insurance only lets you cancel for covered reasons. Death in the family? Yes. Jury duty? Yes. You broke your leg? Yes. What about, "I'm just scared of that new virus on the news"? No. "My knee hurts a little, and I don't feel like walking around Paris." No. "My daughter got a new job and can't come with me." No. If you try to cancel for these reasons with airline insurance, you get 0. The solution? CFAR coverage. Cancel for any reason is an upgrade available only through third-party brokers. Airlines almost never sell this. How it works: you must buy it within 14 to 21 days of your first trip deposit. It costs about 40% more than a standard policy. It allows you to cancel up to 48 hours before departure for literally any reason. You woke up and had a bad feeling? Cancel. It's raining in London? Cancel. You get 75% of your cash back. Not a voucher. Cash. I had a passenger named Brenda. She booked a $10,000 cruise to Asia. 2 weeks before the trip, there was political unrest in the region. Not a war, just protests. The cruise line said, "We are still sailing. No refunds." The airline insurance said, "Civil unrest isn't a covered reason unless the airport is closed." But Brenda had bought a CFAR policy from a third-party broker. She canceled. She got a check for $7,500. She lost $2,500, but she saved $7,500. Her friends who relied on the cruise line's policy lost everything. When you go to an aggregator site like insuremytrip.com, there's a filter on the left side. Check the box that says cancel for any reason. It will filter out all the policies that don't offer it. If you are spending more than $5,000 on a trip, this is the only responsible way to book. We have talked about what is covered. Now we have to talk about how you get paid. This is the secret that determines whether you get your money back in 2 weeks or 2 years. This is secret number 8. Primary versus secondary coverage. Most cheap travel insurance policies, especially those credit card perks we discussed, are secondary. This sounds like a boring technical term, but let me translate it into paperwork purgatory. If your policy is secondary, you cannot just send the hospital bill to the travel insurer. You are legally required to submit the claim to your home insurance first, wait for them to process it, wait for them to deny it, get the official explanation of benefits proving the denial. Then and only then can you submit the claim to the travel insurer. This ping pong game can take 6 to 9 months. Meanwhile, the collections agency for the Italian hospital is calling you every day. The solution? Primary coverage. You want a policy that acts as primary insurance. This means the travel insurer steps in immediately. They are the first responder to your wallet. They do not care what Medicare says. They do not need a denial letter. They just process the bill. I had 2 passengers on the same cruise who both got sick with norovirus and needed IV fluids in the ship's infirmary. The bill was $2,500 each. Passenger A had secondary. She spent 8 months fighting. She had to mail forms to Medicare, wait for the rejection, then mail forms to the cruise insurer. She told me the stress was worse than the virus. Passenger B had primary. She had bought a primary policy from a third-party broker. She took a picture of the bill, uploaded it to the app, and had a direct deposit reimbursement in her bank account before she even got home. When you are on a comparison site like SquareMouth or Insure My Trip, look at the filters. Under medical, there is a checkbox for primary medical. Click it. It might cost you $15 more for the policy. Pay the $15. You are buying months of your life back from bureaucratic hell. Finally, I have a secret for my active retirees. If you are the type of person who visits the grandkids in Florida in the winter, takes a cruise in the spring, and maybe does a bus tour in the fall, you are wasting money by buying insurance for every single trip. This is secret number 9, the annual plan strategy. Let's do the math. Trip 1 insurance, $150. Trip 2 insurance, $200. Trip 3 insurance, $150. Total, $500 per year. And you have to fill out the forms 3 times. The solution? Major insurers offer annual multi-trip plans. You pay one flat fee, often around $250 to $450 for the whole year. It covers every single trip you take that is more than 100 miles from your home. It covers the weekend getaway. It covers the big cruise. It covers the flight to see your sister. If you don't care about trip cancellation because you fly Southwest and can just get flight credits, look for an annual medical-only plan. For about $200 a year, it gives you unlimited medical coverage and evacuation worldwide. It doesn't cover lost bags or canceled flights. It just covers your body. For a senior traveler, this is often the smartest, most value-conscious purchase you can make. I have a regular passenger, Mr. Tate. He travels 6 times a year. He used to buy the airline insurance every time. He was spending $400 a year for terrible coverage. I introduced him to the Allianz All Trips Premier Plan. He paid $450 once. That year, he had a delay in Chicago, a lost bag in London, and a minor urgent care visit in Mexico. He got $650 back in benefits, and he was covered for millions in evacuation, all for a $450 annual fee. He calls it the Costco membership of travel insurance. We've covered so much ground today. We've navigated the look-back periods, the evacuation loopholes, and the credit card myths. I know this topic is heavy. Nobody wants to think about getting hurt on vacation. But you know what feels good? Control. Knowing that you have a policy in your bag that actually works gives you the freedom to enjoy that gelato in Rome without a worry in the world. I want to hear from you in the comments. Question of the day. Have you ever had a claim denied by an airline's insurance policy? Did they use the pre-existing condition excuse? Or, on the flip side, do you have a third-party company you absolutely love? Type the name of the company below. We are a community here, and your recommendations help other seniors choose the right path. I want to leave you with this final thought. You have worked hard for 40 or 50 years to earn this time. You have saved your money. You have raised your families. You have waited for the moment when you could finally see the world on your own terms. Your retirement savings are not just numbers in a bank account. They are your security. They are your legacy for your grandchildren. They are the guarantee of your future comfort. Do not put that legacy at risk because of a lazy click. Do not gamble your financial future on a $49 checkbox that protects the airline's profit margin more than it protects your health. It takes 10 extra minutes to go to a third-party site. It takes 10 minutes to find a policy with a pre-existing waiver. It takes 10 minutes to ensure you have primary coverage. But those 10 minutes can save you $100,000. Those 10 minutes can mean the difference between a medical jet home to your own doctor or being stuck in a clinic halfway across the world. You are smart. You are experienced. You check the expiration dates on your milk. So please, check the fine print on your life insurance. Don't click the box. Take control. Be the guardian of your own journey. I'm Sophia. I'll see you in the sky, safe, secure, and fully covered.